Matt Justice here to talk about how to protect against some macroeconomic risk in the market. Obviously, the evidence has been laid out there many, many times about where we're at in the market. We're at the end of a 5-year cycle in the market. We're coming out of quantitative easing in October. The Fed's looking to raise interest rates next year. You're looking at the VIX being at all-time lows at not anymore, but where it was about a month ago in comparison to 2007. Mergers and acquisitions are at the high point since 2007. I mean, literally, the evidence that we are approaching the end of a marketplace is very vast. There are so many commonalities, and so the question for me right now is not whether or not we will go into another bear market. I absolutely, certainly believe we will. There's a question of timing. There's a question of when, and there's a question of how bad it's going to be. Some people think the next bear market is going to be a lot worse than the one in '07. Some people see it more similar to that of the 2000, 2001 coming out of the dot-com. The real answer is we don't know. You know, it could be 20, 30%, it could be 50, 60%, it could be worse than subprime, it could be worse than dot-com. We don't know. We do not know when, we do not know how bad it is. What we do know and what I do believe is that we will have another bear market coming fairly is that we will have another bear market coming fairly soon within the next year or so is what I kind of project out there. Well, one of the ways that I've been kind of handling it from a trading perspective is looking at the Russell 2000 here. And the reason I've been looking at the Russell 2000 is because when you look at the other major indexes out here, yeah, we have some slowing momentum in the Dow Jones, in the Nasdaq Composite here. We certainly have some slowing momentum there as well when you look at resistance levels kind of decreasing a little bit. In the S&P 500, we haven't seen slowing momentum. In fact, it's really strong right now in the S&P 500. But in the Russell 2000 has not been very strong. It's actually very weak right now. You've already kind of double topped in terms of the reversal. You have slowing momentum. You have the double top. You almost had the double bottom forming the M formation. Some people actually consider that to be an M formation. And you're also starting a little bit of the kiss of death right here. Well, not the kiss of death, but the death cross right here. And that's a very significant moment when a bear market happens. You had that kiss of death right there when you saw the markets break support there in 2011. You had the kiss of death, obviously, when you had the subprime market crash right there as well. So the kiss of death is a very powerful formation. And so when I'm looking at the Russell 2000, I'm saying to myself, you know what? This is probably the index that I want to short. Small and mid cap stocks has been very weak. So what I have personally been doing in my trading to prepare to guard against whatever the macro risk is out there is looking at the Russell 2000. I started doing it back here with the lower lows right there. So once we had a double top on the daily chart, I started shorting the Russell 2000, and I've been doing it with the ETF IWM, which is the iShares Russell 2000. So right here, I added to a bearish position on put options. So I entered the position here on put options. I entered a additional, about doubled up on my contract size there, doubled up on my contract size there. Once it broke out of this resistance level, I closed the entire position. So although this trade right here was not successful, it was 1/3 of the total position, these two trades were very successful on this little short-term downward. So, you know, if it ain't broke, don't fix it, right? So once again, I added to the position once again. So I'm net zero in terms of contracts. I added to the position here, held and I'm holding the entire thing as it goes down. Added here, and I've added here once again. And the reason I've added once again to it is when you look at this little movement up here, that is a little bit of a bearish retracement on the short-term chart, short-term trend. You got some slowing momentum right here on the short-term trend as well. So my anticipation is it's going to come down And we're going to come down and test these lows down here around 1100 or 1090 in the Russell 2000. So and my anticipation is it's going to at least test those levels. And if it does, you can make a little bit of coin in that capacity. And if it ever does end up breaking the actual support level on the weekly chart, you already have a position size that you're profitable in that you can treat a little bit more aggressively. And if it ever does break on that weekly chart there at about, I would say I'd put it right at 1100, a strong little breakdown, maybe 20-point breakdown at 1100, come down under to about 1080. I would expect the market to come down and test the thousand level, and maybe ultimately even coming down into these levels down here around 850, and that would be a bear market, ladies and gentlemen. Not to the subprime level or what or not to the .com level, but it certainly would be a bear market, and that's kind of what my expectation is. That's kind of how I'm treating it. This is Matt Justice. If you want to check out the podcast, go to iTunes, type into the search Trading Justice. You can listen to the 5-star Trading Justice podcast. Tim and myself have lots of guests on there. We have a couple more podcasts coming down the road with some awesome traders. So check us out on the podcast. Leave us a comment. Post a review about the podcast if you love it. If you don't, just don't listen. Later.